Well, we're going to start because we obviously value everybody's time and appreciate you all being here on time. So we're going to cover this through about 20 minutes or so. We'll open up to Q&A at the end. So just a little bit of introduction. I'm Dave Holt. I'm with Surevestor, and my partner Kevin Knight. And Kevin, you can introduce yourself in just a moment. But just to give those, I mean, we know many of you, but if you don't know us, Kevin and I are property managers. We've been doing this for well over 30 years. And we might be thinking, why are we doing a lunch and learn or lunch and earn with our vendors? Well, Kevin and I would often think of how do we grow our business so we can make money that we dreamed about without it costing so much of time just working in the business or time away from our families or doing what we want to do. So we started realizing and figuring out that a big part of what we do in property management was incorporating the products and services from our vendors. So as part of our Surevestor mission of property managers, helping property managers, we decided to do a deep dive with specific vendors like Allison, who you'll meet in just a moment, and really designed to help make managing property easier, more profitable, and less risky. And Kevin, I know you have a story about how you met Allison. So if you could kind of share with us, introduce yourself and share with us a little bit and introduce Allison, and then she can take it from there.
All right. Thank you, Dave. So as Dave said, I'm Kevin Knight, and I'm also one of the co-founders of Surevestor, and I've been doing property management for, I even hate to say it, but over 38 years, long time. And it's kind of interesting. So Allison, you taught me a lesson, at that national convention. So, a lot of times, we get these mindsets, and I really didn't want to hear what Allison had to say. And it's like, it's like, wow, we need to be open to hear what people say, even if we don't think we're interested. I just switched. So I was with Chase Bank for quite a while, and I was paying like $600 a month just to be a customer of Chase Bank. And I moved, I found out about the Business Bank of Texas, and I was able to move most of my accounts over to the Business Bank of Texas for no fees. So, it wasn't too much work to move over, but it's a little bit of work. And I was feeling pretty good about not having any fees after paying $600 a month. And when I was going through the vendor section at National, I was coming up on Allison's booth, and she's like, come over here. And I'm like, I saw who she was with, that she was with the bank. And it's like, no, thanks. I've already done that. I don't need to talk to a bank. And Allison's like, well, we may be able to pay your property management software invoice for you. And I'm like, now she got my attention because my invoice is pretty big. We use Appfolio, and Dave uses Propertyware, and Allison pretty much takes care of both of our invoices. And so I went over to hear what Allison had to say, and she's like, well, we can't pay you cash directly, but we can pay invoices on your behalf based on, of course, how much money, you have with us. And which is kind of funny because I'm actually going down to move some office savings over to Allison later today, just because it doesn't make any money at the bank. But oh shoot, now I threw my train of thought off. So she was telling me, so she was telling me this stuff that she would actually pay me to bank with her. And, my first thought was, because I've never heard anything, pretty much all the banks in the past want me to pay the bank with them. And so I took her stuff, and I'm like, well, this sounds too good to be true. So I actually took her stuff to the Business Bank of Texas and said, hey, look, this is what I got from this other bank. And they said they would actually pay this stuff, invoices on my behalf. And so the Business Bank of Texas, they looked at it and they said, well, it's legal, it's fine to do, but we're not going to do it. And I said, well, thank you for researching that, but that's quite a bit of money that she's willing to pay. So I am going to transfer my accounts over to Allison. And that's how we got our relationship going.
Awesome. Well, introduce Allison for us.
So we have Allison here to tell us how this works. And I do have to say, it's not just paying your invoices, but it's actually what I found, and this was true with me. I don't know if it was true with you, Dave, but when I was with Chase, my trust accounts were not set up proper. If I would have had some kind of issue, I could add some serious problems, and I'll let Allison explain how that comes up and looks like. So Allison, you want to unmute yourself and say hello to everybody?
Hello, everybody. Thank you so much, you guys. I just want to say first, thank you guys for having me here. I'm sure everyone here knows of you guys, and if they don't know of you, they should at least know of your reputation in the industry. Even before we've worked together, Dave and Kevin especially have had fantastic reputations in this industry. They've always been all about helping the property management industry, and so we, Enterprise, myself, I'm happy to work with you guys, and I'm very honored and happy to be here with you guys today. So anyway, so my name is Allison DiSarro. I am the Senior Vice President of Property Management Banking with Enterprise Bank and Trust. So just for full disclosure, Enterprise was always Seacoast. So if you hear me say that name, or if you recognize me from that bank, that's the reason why. It's because Enterprise recently in November acquired Seacoast. So lots to talk about here. Enterprise, this is important to know, Enterprise basically acquired Seacoast for our property management division. That's all public knowledge. They loved our property management banking division. They also liked our SBA division, but we're not going to get into that today, nor is that my specialty to get into. But they loved that division and they couldn't get into it without us, truly. And that's important to know because they're not the only bank. There's so many banks out there who try to get into this arena and they have a tough time doing it, mainly for compliance purposes, which is what we'll get into, but also because they have competition like us, for instance, right? So we have consistently been a part of the property management industry for over 10 years now. I've been with the bank since early 2010, and I'm banking only property management companies. So we certainly have a team, but I myself bank over 600 management companies, and that's all I do. So the reason why is because I specialize in the actual compliance on trust accounts. So there's many benefits of working with us. And, Kevin definitely touched on the monetary aspect, which we're certainly going to get into. But I want to touch for a minute on the compliance aspect. That, in my opinion, really is benefit number one, because we're going to give you a great benefit back on the monetary side. We're going to dive into that, but you're going to get the best of both worlds too. It's not just going to be, a company moves over to Enterprise and, they get some invoices paid for. That's great. But at the end of the day, your, livelihood is based off of your company and trust accounts that you manage on behalf of your clients, and you want to be in compliance. So once customers realize, oh, we get a great monetary benefit, but we also get the compliance benefit as well, it's just the perfect marriage. So when I say I specialize in compliance on trust accounts, what I'm really referring to is it's a term that I coined, but I wouldn't say it's like the legal term, but the legal protection of federal protection of a trust account. So I'm sure many of you are from different states. I'm sure everyone's, not just in one state here. I will tell you, I bank in many states. I think I bank in like 28 different states right now. And all of the Department of Real Estate, or they're, the property management company's governing entity, they all have pretty standard rules of what makes a trust account. And to be very honest, nothing I wouldn't say to them. A lot of times it's very contradictory to what a true trust account should be set up as. If you, meet their standards of essentially nicknaming an account trust account, maybe you'll pass an audit. Certainly I want you all to pass an audit, but I want those funds to be protected as well. And that's the protection that I refer to always. So some risks of not having a true trust account and just having these nicknames, for instance, which is, sorry, Kevin, but you said it or else I wouldn't have, which is essentially what Chase did. They just nicknamed an account, trust account. Yeah. The risk of doing that puts those funds at risk from multiple things, but let's talk about the main ones. So first, lack of FDIC insurance. Most companies, if you're an established company, your combined trust accounts, even if you have multiple trust accounts, Even if you have your business account in the same bank, your combined balances on deposit are over $250,000. The FDIC insurance on a tax ID number at the bank, no matter how many accounts you have, is $250,000 in non-interest bearing funds. If you have a trust account, and this is very important, if it is a true trust account and truly set up and vested as a trust account, not just a nickname, then each beneficiary within that trust account, so essentially for you guys, that's your landlords and your rental trust, for instance, is insured up to $250,000. Even though that account is set up under the company's tax ID number, you are acting as fiduciary for those funds. So it is ensuring, again, full disclosure, as long as it's set up correctly, it is ensuring that each beneficiary within that account is treated as if they are holding their own account under their own tax ID number at the bank. While that is probably the most common risk, I will also say that it's probably the least impacted, because really the only time that you're going to have to worry about a FDIC insurance is if your bank is to go under, right? So back in 2008, 2009, that was happening all the time. Not so much on a daily basis now, but it certainly happens. Now, the one that actually happens more often than not that I see a lot in your industry, not with our customers, but that I see in your industry, is the lawsuits, governing entity liens, judgments, anything where your corporation is being impacted. Especially in this industry, there are so many lawsuits, especially in COVID times, right? We've been hearing all about the lawsuits. Anytime that a governing entity wants to put a lien or levy against your tax ID number, they issue, I'm blanking on the actual legal term, but it's essentially a notice of levy to the bank for that tax ID number. Let's say that they need to freeze, talk random funds here, random amounts here. Let's say that they need to freeze $50,000. When the bank gets that notice of levy, they have to essentially choose an account under your tax ID number that they need to freeze those funds from. So if those accounts are not truly set up as trust accounts, they can freeze, in this case, $50,000 from that trust account. Those are not your assets, as you all know. They should not be treated as your assets. So those are the two most common risks outside of a failed audit. Believe me, I know I could name dozens of companies who I have brought over in the past who have said, well, I went through an audit with my state, back whenever, and I passed with flying colors. Just because you pass an audit, honestly, doesn't mean that you have a true trust account. The benefit to passing an audit can sometimes be just that you pass an audit. And if these other risks, we only touched on a couple of them, I'm not going to take everyone's whole day up. If these specific risks happen, I promise you the Department of Real Estate and the Real Estate Commission has no pull over what happens to those funds and what the bank does with those funds. So it's very important that you're with a bank who not only understands your industry, but understands how to bank your industry as well, and not only put you in compliance, but keep you in compliance also. So I don't know what this says about me, but I could talk about trust funds and trust compliance all day long. So I'm always happy to answer more questions on the compliance afterwards, but we are here to talk about excess revenue, essentially, right? So let's talk about the monetary benefits. So we have always
Allison, before you do the monetary, I just want to show, I don't know how it'll show, but this is what happens a lot. The banks just nickname account a trust account. They'll call it a trust account, but it's not a trust account. There is no trust account protection. I do know, the Real Estate Commission, sometimes they look at it and say, oh, it's a trust account. They're not necessarily deep diving, but what you're saying, there is no FDIC protection for all these different owners or levies, because I'm going to say probably 80% of the management companies I come across, they're the banks, when you go to the bank and say, I need a trust account, they don't get what a true trust account is. The bank themselves is giving you misinformation by nicknaming your account.
Yeah. It's very
also down at the bottom, I'm going to just interject. There's a section called Q&A. So as you're thinking about it and you have questions for Allison, just put them in there and Kevin will get to those, read those questions and Allison can answer them when she's done.
Oh yeah, I just saw some in the chat as well. Okay, yeah, I'll get to those when I'm done as well. Yeah, but to Kevin's point, sorry, I just got stuck. To Kevin's point, you know, it's very difficult for banks to understand this. Believe me, we didn't just jump in head first and figure it out. We didn't get actually out in your industry until we figured it out. There's a lot of work that went into it, and it's very difficult for banks to understand how to do it. Hence why, you know, back to what I was saying before, hence why Enterprise just bought a bank that knew how to do it, right? Because it's very difficult to implement. It's very different than, for instance, if you have, you know, a family trust account, or, you know, a family estate that you put into a trust at a bank. There's a lot of paperwork, a lot of legal documentation that you have to back that up, that the bank would use to set up that account correctly. Property management companies don't have that, and that's what the banks are used to. So essentially, if they don't have that required documentation that they're used to getting, then they essentially just put in a nickname. And, you know, I make this joke a lot, so someone may have already heard it before, but I always joke that like the protection, the nickname of a trust account on a bank account offers you the exact same protection as a payroll account, a maintenance account. So you could essentially name this broker's vacation fund and it wouldn't matter. Like you could change it at any given day. A red flag there's a lot of red flags, but I don't think we have enough time to go through all of them. But one red flag that you should think about is if you ever did go to change the name of that account, if the bank just says, okay, we'll go ahead and change it, and they don't require a whole new signature card, whole new entity documentation for that, then that's a red flag right there that they were already nicknaming the account. Because a nickname you can change, half time you can change the nickname online. So anyway, I'll get off my soapbox on that. But anyway, so let's talk about the monetary benefit while we have time. So the monetary benefit, this is called analysis banking. A couple things that set us apart here besides the actual, you know, rate and what we pay and all of that is actually the consistency. And I want to get into that in more detail once you guys learn what analysis banking is. But we have consistently been paying analysis banking credits back to our property management customers. Full disclosure, maybe we wouldn't for a restaurant down the street, but we've always stayed very committed to the property management industry. So what this does, what analysis banking does, it is like Kevin said, his bank said, yeah, it's legal, they can do it. They didn't want to do it. My point there is that banks do it. You know, it's a product at a bank. But I always say that analysis banking really works for or against you depending on who you bank with. For us and our clients, it certainly always works for them. But the way that it works is it allows all of your average balances, and I'm going to create a scenario so everyone kind of hopefully better understand what I'm saying here, but it allows all of your average balances to work together to first offset bank fees. And after offsetting bank fees, whatever is left over, I'll walk you guys all through it, your net credit can be used towards third-party invoices. It is not interest, but kind of consider it as interest to better understand how it all works. So let's say that a company, I'm going to use a scenario here. Let's say a company has 3 accounts. They have a business account, a security deposit trust account, and a client trust account. So they have 3 accounts. Let's say it totals $1 million combined in monthly average balances. Certainly rents come in and then they go back out, but it's all based off of the monthly average. And I'll also say, full disclosure, you do not need to hold $1 million in your average balances. We're just going to use this for easy numbers. I have clients who have a lot less and they're still benefiting. So let's say that they got about $1 million. So the $1 million in the average balances have to first work where they rate, just like interest. It's much more beneficial than interest for many reasons, which we can also talk about after if you'd like. But it gives you that quote unquote interest, what we call gross credit first, right? So let's say for easy math, let's say that it was 1%. So the 1% off that 1 million in average balances is going to give them roughly around like let's say $830 per month. I don't know if that's exactly right, but let's say that. So that $830 per month is going to first go towards bank fees. Now with analysis, and I want to talk about this because a lot of folks say, oh, well, I don't pay bank fees. I have free banking. That's great. And we're going to get you with minimum free banking. But your actual bank fees have to be ran through analysis. That is the rule with analysis across banks. The regulation, we must charge analysis fees. Bear with me here. It essentially goes into a queue. And we don't hard charge them. Essentially goes into a queue. So at the end of the month, it shows, okay, they had $1 million in average balances. They had a 1% rate, and their total analysis fees, including, account maintenance, ACH, remote deposit, anything that they use at the bank, was $100. So now that $830 of the gross credit is just going to offset that $100. So it offset your bank fees. So essentially, yes, you do have free banking because it offset that. So there's no charge to your account, nothing. But now you have left over, in this case, $730 that month. So that $730, while it's not interest, because we cannot legally put it in your pocket, essentially, we can't, credit it to your account, we can pay towards your third-party invoices. So certainly they have to be somewhat banking, accounting related, unless the bank has a partnership. So for instance, actually Surevestor, we have a partnership. So it's a invoice that we can pay. We can also pay for software invoices, third-party bookkeepers, virtual assistants. While that doesn't sound like it's banking or accounting related, we will assume that the virtual assistant is doing your invoicing. So we're very creative on what we can and cannot pay. But the rule is that the bank has to pay directly to the vendor. So it never touches your hand. So we're essentially just paying your invoice for you with these credits that we have on deposit. Now, the reason why I say it really works for or against you, depending on who you're banking with, I'll stop and say that first of all, even prior to COVID, right, with the Fed funds drop and all that I'm sure you all are acutely aware of, even prior to that, for the last 10 years, you were really hard pressed to find a bank that had a good analysis program. Not that they didn't exist beyond us, but there were few. Obviously with COVID, people have changed that as well. We've always stayed consistent regardless. So the reason why I say it works for or against you is because if you're with a lot of bankers, let me just say, a lot of bankers will come out and say, oh, we'll pay you 1%. We'll pay you 1% on your average balances. Full disclosure, we pay a little bit more than 1%, but I'm using this as a number. That's great. And a lot of people get hung up on that gross rate, but at the end of the day, the net is all that matters, right? Because it's not an interest-bearing account. You have to offset those bank fees first before you earn your net. So a lot of banks, or not a lot, but bankers could say, oh, we'll give you 1%, but their fees could be so high. So instead of paying $100 a month before your net credits, you could be underneath. You could be paying a net of $300, right? It's very tricky. So it's truly kind of a smoke and mirrors product sometimes, and it's treated that way. We're very transparent about how we do it. Usually, or every time if a customer reaches out to me and says that they would like to consider moving, we always ask for statements, and we plug all of that data into our pro forma, and it's very transparent, and it just shows you, how much you should expect to net each month. But it's a great program. It, like I said, it A, stays consistent, and B, it also continues to grow as you grow. So as your average balances continue to grow, it automatically calculates each month. So again, while it's not interest to you, it certainly offsets your bottom line. So you get the monetary aspect and the compliance aspect, and it's the best of both worlds.
Yeah, I want to say, Allison, you guys called me like at the end of last year and said, hey, you guys got $5,000 credit that you need to use before the end of the year. And we were scrambling to find invoices so you could pay, so we could use that $5,000 credit. It's significant. The earnings are that we're saving.
Yeah, and to your point, Kevin, that was even in addition to what we were already paying each month for your other invoices. And so that's a great point, and thank you for saying that, because we encourage you to use it. It's not like use it or lose it. We do at the end of the year ask you to use it, but we encourage. I mean, I'm kind of like knocking on everyone's door saying, use these before the year, runs out.
All right, Kevin, can you, as for the sake of time here, go through, I know we have some questions in the chat and a couple questions in the Q&A. If you could read those for Allison. And
Okay, well, Rob's asking if you're in Alabama.
No, and I think Alabama does have a brick and mortar account rule. So some states require their the bank can bank in Alabama. Some states like Alabama have a Department of Real Estate rule that requires your trust accounts be in a brick and mortar branch. We do not have a branch in Alabama. So as of now, we cannot bank those trust accounts.
Okay, and I gotta say hi to Nathan. I have not seen Nathan or talked to Nathan in ages, but Nathan is asking,
Hi, Nathan.
Are we in Wyoming? Are you in Wyoming?
Nathan, give me a minute. Let me get back to you on that, Nathan. I got to see if that's on my yes states or not. I can't remember off the top of my head.
And Ian's saying Tennessee or Georgia.
Yeah, Tennessee and Georgia. We are.
Okay, let's see here. What we got here?
Wyoming is a yes.
Yeah, Ian's saying that the banks have asked them for trust documents as a separate taxable entity to set up a trust account.
Yeah, it's essentially the same scenario I was giving. Unfortunately, they just don't understand the industry. They don't understand how to set up. These are all called pass-through accounts. I don't know if anyone's ever heard that term before, but there's a term called pass-through insurance, and they're specific. It's an FDIC term, and it's specifically for fiduciary held accounts in the fiduciary tax ID number. It's just a process that the banks don't. A lot of bankers will understand the term pass-through, but it's the process of how to vest that correctly and how to set it up that they don't understand. So I'm sorry, but don't go getting an attorney to create a taxable entity for you for these trust documents.
Allison, you want to put your contact information in the chat so they could reach out to you?
Sure, I'll do that right now.
And as Allison's doing that, we will be having another lunch and earn on the 27th of May. So same time, 2 p.m. Central Standard Time. And we'll be sending out email notifications for that.
Yeah, so on that, so Dave, what I want to say, so we really have two different lunch and earns. We have our tenant liability one that's when's our tenant liability one?
18th. So May 18th, that's a Tuesday.
So that's May 18th. That's our Surevestor Master Policy Tenant Liability. But our next vendor one, which I tell you, it's a good one. And a lot of people, I kind of thought a lot of people have seen Allison or heard of Allison. But this other one, I think they kind of are a little bit of a secret vendor, and we both use them for super operational efficiency. So I'm excited to get the email out on that. So that'll be May 27th.
And all the vendors that we're talking with, Kevin and I both use. So, and that's the reason for this, is to give you some valuable insight into how we're using it in our property management companies. And we're only talking with the vendors that really do provide value.
Yeah.
And Allison was the first that came to mind.
Probably because I've been beating down your door to be able to work with you guys for so long. I really do admire everything.
Well, here's the thing: if you're at all like me, you procrastinate on things and go, "Oh, I don't want to change banks," and all the hassle of doing that. Believe me, you'll be so happy that you did. So talk to Allison. It's really not as hard as you think. That fear is wasn't realized for me. I procrastinated for about 2 years, Allison, and finally just said, okay, I got to do this. And I did. And I went, why didn't I do this 2 years ago? So don't be like me. Take action. Give Allison a call.
Thank you.
Let's see. We may have another question came in here. Let's see. So Rob's saying, so I understand that my company does not have
Oh, here we go.
2 trust accounts. Where do I need to go? He's with Regions now. So how does some, if you're not in their state, how can they get a true trust account?
Fortunately, I depends on the state. I don't know. I mean, they obviously have to do their due diligence. I'm sure that there are. Rob, which state is Rob in again? Alabama? Is it Alabama?
Let's see, where was Rob?
Yeah, Alabama.
Yeah, Alabama.
Yeah.
I don't know any off the top of my head. I don't know any off the top of my head, but certainly, you know, reach out to your resources, whether you guys have some states have like auditor consultants who are familiar and work with a lot of the different banks. I know California does. I don't know about Alabama specifically. You can reach out to your real estate attorney. You can also reach out to other property management companies. Certainly don't just take their word for it that yes, I have a trust account, because believe me, the amount of people I bring over on a monthly basis who tell me they have a trust account and they don't is pretty much close to 100%. So but do your due diligence, you know, then when you reach out to that bank, ask them some questions, ask them some red flag questions, ask them how much make sure they understand it's a property management trust account, how many property management trust accounts they work with, what kind of FDIC insurance would a property management trust account get if they had, just throw out random numbers, whether you have this much or not, just say $1 million. And the answer should be, in that property management trust account, if there are at least 4 beneficiaries, then that account is insured for $1 million. Also ask them the question of what would happen if there was a governing entity lien or levy on my account. Just ask some red flag questions. You know, you're going to have to screen them a little bit. And I apologize. If I knew of every other bank, I probably wouldn't be so successful. But also, if I did, I would, and it was in a bank that I was in a state that I couldn't bank in, I would certainly tell you.
So here's Nathan actually has a good question, Allison. And I know we had this problem with Chase, but I don't seem like we have this problem anymore. So Nathan says, I have a scanner, but some checks or money order can't be scanned. How are these items deposited with you?
Well, with us, we would do a money order. Honestly, it really depends on a money order. I'm sorry, a check scanner. We would do a check scanner, which does take money orders and cashier's checks and checks. It really does depend on the bank. Like even if they're using the same scanner as another bank, it really comes down to their software and which software that scanner is attached to. We are very, very dependent on our scanners. I mean, we have, I don't know how many branches, but we are definitely not the bank that has a branch on every corner. And so we need our clients to use those scanners. If you don't have a lot of checks, though, you know, you don't have your tenants pay mostly online, for instance, we would have a conversation. If we felt like you actually don't need the check scanner, then maybe we would recommend just the very simple mobile deposit app on the phone.
So what he's talking about, Allison, because we experienced this with Chase a lot. So yeah. Chase does not we couldn't scan money orders to Chase a lot of times.
They couldn't read them.
Yeah, they couldn't read them. But since we've been using you, we have not had any problems with checks or money orders not going through. So I don't know if it's a different scanner or you just have better software. But since I want to say Seacoast, since we start with Seacoast and now Enterprise, we have not had that same issue. So it's not been an issue. Have you had any issues with scanning stuff, Dave?
No, we haven't. And Allison, you provide the scanner, correct?
Yes, we do. But to that point, so the money orders, you guys know, you just said they can't read it because the ink is so light. So first thing, it really comes down to the software, because for instance, the software they use now, you can key in whatever number it didn't read. Yeah. But I'm going to give you all a dirty little secret, and that is that at any bank, really, if you get these money orders, ink, all you should do, and I wish I had a pen, I don't, but you should just take, if it's $500 money order, for instance, right above the window that says $500 on, like the numeric amount, just write very clearly, right
and we definitely charge a fee when they do that. But I do know when we were with Chase, their scanner never did money orders, and most of the time did checks, but money orders were a problem. And since we've been with Seacoast, and I want to say we've been 3 years now, or with you, Allison.
Yeah, at least 3 years.
Yeah, and I don't think we've had one issue with anything really. Everything's gone smooth. We don't have any problems with if we have to scan. So you did set us up with the scanner, and I think you're right. I think we're able to actually plug into the software and just punch in the number if need be. But yeah, it just hasn't been a problem.
So again, to contact Allison, her information, contact information, email and phone number are in the chat. So take a look there. And if there's not anything else, we'll conclude our session. Allison, thank you so much. Great information. And thank you all for attending. And again, our next Lunch and Learn, we'll have our TLI Lunch and Learn, Tenant Liability, which is on the 18th of May. And then our next vendor, Lunch and Learn, will be on the 27th of May. So please join us.
Yeah.
Thank you. Yeah. Thank you guys so much for having me.
Take care. Appreciate it.
And while they're still logging off, I'm going to tell them, even if they have a tenant liability program in place, again, it's kind of like the banking. They should hear our Lunch and Learn just so they can get some good education that goes with the tenant liability.
And they can sign up with Allison and get it paid for through the bank.
Right. Actually, with our tenant liability, they make money on that anyway. So.
Well, they do, but you can still get it paid for. I think we have somebody who's doing that.
Yeah, Michael Francis.
Okay.
Not sure why, but if that makes them happy, it's fine.
All right.
All right. We'll see y'all later.
Appreciate it. Thanks again.